So, do you buy the stock on the pullback? Mitch Kaiser is senior retail analyst at Piper Jaffray. He's had an outperform rating on Best Buy since December of 2008. Since then, shares are up 60%. Were you shocked by this headline this morning?
You know, I think it was worse than we expected. Certainly the big disappointment were the sales numbers and the domestic comp coming in at down 5%. We were looking for down 2%. I think the market was weak, and quite honestly, the market share losses were a little bit of a surprise to us.
And who are they losing market share to?
Yeah, I think it's the mass channel. If you really look at where the products are, they're more of a commodity-based product. Sales of TVs are pretty
Walmart,
much
Amazon?
Walmart, Amazon, pretty much. So yes.
Well, it's up 60% since you put it in as outperform.
Right.
So isn't it time to declare victory and withdraw from the field?
Well, I think you have to take a couple of things into account. It's currently trading at about 11 times this year's number. I'd expect next year's numbers to go up. It's about a 12% free cash flow yield. So from a value perspective, they're doing a lot of good things. Their gross margins are going up, and they're buying back a lot of stock with that free cash flow that they're generating.
But market share is
market share is
important.
market share, right. And, I think that you have to believe that the newer featured TVs, IP-connected TV and 3D, are going to take off, and they're a bigger participant when new technologies come on. When it becomes more of a commodity product, the mass channel is a bigger participant, and that's where we are in the cycle at this point.
All right, let's bring in Richard Hastings with Global Hunter Securities to talk about the retail sales number out a few minutes ago. They came in better than expected.
Right.
Good morning, Richard. Thank you for being with us.
Oh, good morning, Mark.
So there seem to be a lot of signs here that the consumer is back.
Yeah, there's a broadening strength in the consumer universe. The ex-autos, whether you include food and grocery or not, up 7.9% year over year, not seasonally adjusted. That's a beautiful number. We're looking at December ex-autos sales to increase by 3.25%, total holiday 3 months to go up to about $941 billion. So the Best Buy situation, we believe, is mostly specific to Best Buy, somewhat specific to U.S. consumer spending on the lower income side. And we do believe, based on previous research that we did on the Circuit City collapse and market share opportunities for Best Buy, that some of what we see this morning was possibly building up for about the last year. So to a degree, we were not surprised at the severity of what we saw this morning.
I'm just curious, so why are you confident December is going to be strong? Because it seems like the reason we saw the strength in November was taking out gasoline was because people went shopping right out. We had a few days of the holiday shopping season in November. There were a lot of promotions. Is it possible you got all the selling then and December is going to be pretty weak?
And the promotions have a lot to do with driving volume among those that don't have as much spending power. But the evidence from what's happening in full-price products in Apple, Ralph Lauren, Dillard's, and others that are really moving things at full prices, Coach as well, you can see a broad base of strength that will continue through December, and that'll lift higher-priced, higher-margin items all the way through the end of December. So we're confident that December will continue along a slightly different base with more spending power from those that have higher incomes during December.
Not too late to buy the stocks?
The problem with the stock market for retail stocks right now, when CNBC was indicating yesterday all-time highs in Ralph Lauren, Apple, Coach, and
Nike.
in Amazon, and Nike as well. Very, very interesting, because you start to get a lot of momentum trading, which sometimes can indicate that you're close to a top. So if we look at the S&P retail index at about 505, 500, we probably have about 5% to 7.5% more based on momentum before we start to top out. So there are some rest. Yes.
Okay, bottom word to you, Mitch. Best Buy today down 13%. Do you buy it on the weakness? Do you wait?
I would buy it on the weakness. I still like the valuation. I still think that the market share gains will come back once we see the advanced featured TVs come back.
All right.
All right, Mitch, Richard, thank you both very much. Appreciate it.